Hello and welcome to FountainFX on Monday the 19th of January 2015. As you can see, we're looking at Market Watch, and just really to get a figure or a feel for the aftermath of the Swiss situation that happened last Thursday with the devaluation of the euro against the Swiss franc and also the US dollar against the Swiss franc when the Swiss bank decided to take the reins off its own currency and let its currency free float. We've now got some issues that come out. Chinese stock market is plunging. Forex sales point to capital outflows, so that's an issue there. It talks about Draghi's quantitative easing, which is the proposed European printing of money in Europe to support the euro. So this would be great. The thing that you've got to realise here is that this is going to cause the euro to be devalued. That is a really bad picture, isn't it? It looks like some demon of some sorts. But anyway, it says here, why would you want to keep your money in Italian bonds that yield only 1.77%? Oh, well, there you go. So the benefit is go to American bonds or go to British guilds, etc. So this is what it's trying to say, that at the end of the day, the euro's in serious problems. What we can do is we can also take a look at another one, which is to do with the fact that if we look further down here, other than the fact that they reckon the richest 1% is now going to own more than everybody else. So isn't that interesting? 1% is going to have more than the 99%, the rest of the world. Isn't that incredible? Anyway, Switzerland may act again, it reckons. Now, the reason for comments like this is basically to get the open market, which is us and the banks, etc., to help change the currency rather than have the Bank of Switzerland actually do it. So let's go and have a quick look at the charts, and we can show you the very exaggerated euro Swiss franc. And as you can see, price has literally done nothing. This is a 1 hour chart, so for the last 1, 2, 3, 4, 5. So since this morning, basically price opened down here, moved up a little bit. So not a lot of movement, certainly not in comparison to this. Comparison to what happened before, yes, it is a lot of movement. So I think with regards to the Swiss franc, the reason they're starting to say, oh, they're going to act and you have been warned, is because they would like, and it happens with the Bank of Japan as well, they would like to see the actual market itself make an effect on the currency rather than them having to buy or sell their gold in order to shift the currency value. So they're really wanting us to move the market. So we just need to look at this and see what's happening from here. At the moment, there's no great excitement in terms of any movement. You can't see that there's any real pattern here. Yes, you could see there's resistance there and the support down here, and you could run a trend line along there and say, oh, it's broken the trend line, it's going up, it's no longer going down, but it is sitting right between this low and this high, and there's no real clear direction from it. So we have to wait until there's a clear direction. That's the same with the US dollar against the Swiss franc. Look, exactly the same pattern. No, nothing exciting. If we flick over to the euro US dollar, we can see that today, basically the open today, the European Open was here. Price pushed up into this area of previous resistance, and then fell straight back down into the support, and then turned and rallied all the way up. So the real main move was from here. I'll highlight it with 2 lines. Was from down here, and then all the way up to here. So this is the move that happened on the day, from the 115.50 all the way up to the 116.30, 116.25, you might as well say. So yep, a good 70 points. Not a bad trade there if you could get that. I actually took the trade from the top down here down to there, took 30 points out of the market, and then had to go off and play golf. But that's really the opportunity that you had there, and that's it. So happy trading from FountainFX. We'll catch you tomorrow, and we'll keep watching the markets and seeing what's going to come out of this Swiss situation. So all the very best. Bye bye.